Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 19th through February 23rd, where we'll see if inflation is still smoldering. We'll talk about ways that we can make money while inflation is still smoldering. So thank you again for joining us for part one of our weekly trading game plan for February 19th through February 23rd. And let's get started. So here's our Google document with our notes for our part one of our weekly trading game plan for February 19th through February 23rd. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, concoct our trading strategies, trade ideas. You can find all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder. So you can refer back to the notes from this week as well as notes from previous weeks. And again, you can find a direct link to that Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So firstly, we'll see how the markets ended up on Friday on the main page on FinBiz. So we can see we had a little bit of a dip. We'll talk about the inflation numbers we got, PPI, etc., as well as the consumer sentiment data that we got. We can see the markets did try to rally into early afternoon and then dipped back down after about 2 p.m., ended up all negative. Dow down about 0.4, NASDAQ down about 0.8, and S&P down about 0.5. And again, we could see that turn around about 2 p.m. on each of the markets. Also saw profit taking a rotation out of the Magnificent Seven. Not a whole lot of green, just Lilly, a little bit of financials, Berkshire, etc. We see we had 63% declining, 32% advancing. Although we had 90% new highs, only 10% new lows. We still got 60% above their 50-day moving average, 40% below. And we've got 65, 66% above their 200-day moving average, about 34% below. So even though it's showing a little bullish, that's probably just that market on close green candle we saw at the end. Again, afternoon was pretty bearish. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Some of the news, they're saying it's suddenly a great time to buy an EV. I don't know about that. Possible strike at a Ford plant. Looking at Europe for cheap alternatives. Bounced back from its inflation-inspired dive. So we'll see how the markets reacted to both the CPI data and the PPI data. And they broke their 5-week winning streak. So we see oil is now, on the uprise back towards 80, bounced off 75. Now we're trading between 75 and 80. Natural gas is still pretty low. We'll see it's broken down. It's now, 160 or below. Gold did gain its footing, as we'll see in the futures, above 2,000. Now it's at 2025. We'll also see silver looks like it gained its footing above 23. So uptrends on gold and silver. We see the futures on all the indices are currently pointing down, with the NASDAQ pointing down the most severely at minus 1% right now. DXY, the dollar, popped up into the 104 to 105 range on the inflationary data. But then we see some of the European or some of the foreign currencies did recover. Again, it's been pretty range bound right around 104. And then again, we saw the Treasury yields bounce back up into the 4.2, 4.3, 4.4 range. Again, something we've been talking about for a while, expecting that uptick in yields down in prices again on the smoldering inflation data, and the fact that the Fed's clearly stated they're not cutting in March, and now with this inflationary data, as we'll see, the time frame for cuts will probably get pushed out. Welcome, Nug M, Easy Mike, Alan Krantz. Thank you all for joining us. Hope you all are doing well. So we'll also look at each of the major indices. So we've got this nice link in our notes that shows us a screener for all the major indices. You can also find these screeners again in our ETFs Google Sheet, which we'll look at a little bit later, and also in our Watchlist Google Sheet. So both the major index screener and the technology component screener that we'll look at. So we see the Dow is again testing this upper trend line, getting rejected off that upper trend line, keeps retesting that. The overall trend is still up. I expect further chop along that resistance line. IWM's been very volatile, very choppy. It's much more sensitive to the interest rates. A lot of IWM I hear is being driven by SMCI. So again, very volatile. Qs, we see that very tight channel. Again, it's bouncing off that lower trend line as support, getting rejected. It did break out briefly, but generally getting rejected off that upper trend line. I expect that continuing to ping pong between those trend lines. One of the more positive things with the NASDAQ is you see that nice upwardly trending moving average. So definitely a strong upward trend, a lot of momentum. Again, this market right now favors momentum traders. So if you're a momentum trader, that should continue to work at this point. We can see the SPY, again, getting rejected off that upper trend line. And then retesting, so I would expect it to continue to retest that upper trend line, near new all-time highs. A little bit more concerning with the SPY is its gap above the moving average. We do see a nice upward trend, but again, it's got quite a bit of room below the moving average, so probably more risk there, and we might see, steeper declines in the SPY. We look at a breakdown of the technology components. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. Let me refresh that. It stopped filling in very, very well. So I'll look at the TQQQ first, let the others fill in a second. Again, that's going to follow the NASDAQ pretty much. Again, we see it testing that upper trend line, getting support from the lower trend line. We've got the broader TECL. Again, very similar, getting rejected off that upper trend line. Again, it's got some room to the support. The support's quite a bit below where it currently is. It looks like it rolled over, so we might get a further dip in the broader technology. Again, biotechs, it's got a declining resistance line that it's retesting, a narrowing channel, very good support of both of the lower channel and the moving average. So it's got good support. We'll continue to bounce up and test that upper trend line. We can see semiconductors, is breaking out, retesting that resistance line again, driven by a lot of NVIDIA, AMD, etc. But then we see these pretty significant rejections. So I would expect that to continue. And we'll talk about the NVIDIA earnings coming up as well. ARK-K, see it broke above its trend line, but we've got a declining short-term trend and then got rejected. Looks like it's going to dip back down, retest the moving average. FANG-U's, again, rejected off the upper trend line. So again, with all of these things, again, my humble opinion, I think they're going to continue to test, get rejected off those upper trend lines, and then, correct, and then retest. So again, a lot of chop if you're a short-term trader, plenty of opportunities with trading. These are all the long leveraged ETFs, with the exception ARK-K. ARK-K obviously is a little levered. But the others are all levered along, and the inverses you can trade when they get that rejection and short-term correction. So plenty of short-term opportunities, but again, the momentum is definitely upward in all of these areas. So I hope that all helps. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. Okay. We grab a quick drink and we'll go look at the sectors, industries, groups in FinViz as well. So if we look at the groups tab in FinViz, we can see on Friday, and this is part of the discussion with smoldering inflation, as we saw a little bit of a flight to safety, more into the defensive sector. So basic materials, healthcare, energy, and defensive. So again, when we got the hot PPI data, we get a little bit of a rotation into defensive. And again, we'll talk about that as part of the strategy for dealing with the smoldering inflation. And we saw a rotation out of technology, communication services, out of the mega cap techs, also the interest rate sensitive sectors like real estate and industrials. Utilities a little negative as well. So again, with that hot PPI data, we get a rotation back into the defensive sectors, out of the growth sectors, out of the interest rate sensitive sectors. For the week, again, more of a defensive stance. We got the hot CPI data on Tuesday, hot PPI data on Thursday. So again, with smoldering inflation, we're going to see some rotation back into the more defensive sectors, out of the growth sectors and the interest rate sensitive sectors. However, for the month, technology's still been very strong. So again, they're also viewing the Magnificent Seven, the mega cap techs, as a flight to safety. And we could talk about why they're not necessarily as sensitive to inflation as well. Financials had a rebound. Industrial still relatively strong. Look at the industries for Friday. Got building materials. Got some basic materials. Copper had a nice rebound. Gold and silver rebounding. Energy, oil, we saw oil bounce back up. Some of the REITs did okay. See some profit taking in semiconductors. Again, other REITs going to be interest rate sensitive. So we saw the bond yields bounce up. Again, solar, very interest rate sensitive. Computer hardware. So for the week, we got a waste management, textile, solar was positive for the week. Again, pretty volatile, but again, they're going to be interest rate sensitive, and higher for longer is bad for solar. Oil, natural gas, positive. REITs positive. Financials, we got some banks, so the financials rebounded. Gold slightly negative for the week. Silver slightly negative. And we saw, again, I'll pop up the uranium chart. Again, you can pop up any of these industries, see the stocks in any of these industries by just clicking on the bar in FinViz, which is nice. Again, as we discussed previously, it looks like the uranium stocks peaked and rolled over. It looks like they're cycling back down. So we'll wait to see where that cycle ends and see if we can get some opportunities in uranium in the near future again. But again, it looks like they've all kind of peaked out, rolled over, and are cycling down at this point. Again, solar strong for the month, kind of a mixture, oil, energy, etc. Steel had a rebound. Again, coal, another one we're watching is coking coal. So that had some cycle down. We'll talk about AREC tomorrow. Another one we've watched in the past, METC. So I'm keeping an eye on coal and uranium sector as well. Okay, now I'll open up the calendar in investing.com. We'll talk about the economic data that we got this week and what's upcoming. Easy Mike was asking about one of the coal stocks we were just looking at, which is Archer Midland. So if I go back to coal, pop that up. So I probably lost it now. Here we go. So coke and coal, there's Archer. You see it broke down below its support line. Again, looks like it rolled over and headed down. All these coals look like they've, with the exception of that one, Sun Coke looks like it's okay, but the others look like they're headed down at this point. I hope that helps. Okay, let's just a quick reminder, as this economic data comes out, I try to post it as quickly as possible in a Surf the Markets channel in our Discord. Our Discord's free to join. We'd encourage you all to join our Discord and participate. We can continue these discussions, 24/7, and you can get this economic data, the important economic data, in near real time, as I posted in the Surf the Markets channel in our Discord. So you can see I try to get a screenshot from investing.com as well as the raw data and a link as well. We also have some news that I'll snap the important news like oil, natural gas inventories, etc. So again, last week we got core CPI data. Again, came out hotter than expected, both from a month-on-month and a year-on-year standpoint. Saw the markets initially reacted negatively and then rallied towards the end of the day. So there's still quite a bit of positive, you could say irrational exuberance or exuberance FOMO in the market. And we saw a pretty quick reaction recovery from that negative reaction of CPI. But again, this shows that inflation is still smoldering. Again, higher than expected, above 3% year on year. Again, the Fed's not going to like that. That's going to push out the time frame for any kind of cuts. There's no reason to cut. There's even talk in some of the news shows of a possible hike. In my humble opinion, I don't think we're going to get any more hikes. And as I've stated, I think we won't get cuts till at least the second half of this year. See, real earnings was negative. Small business optimism declined. So again, a little bit of negativity in the view for business. Then Thursday, we got both jobless claims and PPI data that we'll look at. Friday's PPI data. So Thursday, we got jobless claims. So continuing a little above expectations. Retail sales, much worse than expected. For January, I'm not terribly surprised. Again, I think most people spent their money for the holidays, so the expectation was positive. We got negative, so slowing economy, slowing consumer spending. Initial jobless claims was less than expected. However, we keep hearing of tech companies in particular with additional job cuts, additional layoffs. Again, I don't think those show up because I think those people that are being laid off from those tech companies can pretty easily find other jobs. Manufacturing a bit negative. Again, we talked about retail sales. You see retail sales month on month, much worse than expected. Friday, again, was options expiration for February. So, again, part of the increased volatility on Friday. See, building permits was less than expected. Again, we saw a jump in bond yields. So, fewer housing starts. Fewer permitting. So, new homes are slowing down. And we got this core PPI, so the front end of the inflation curve, significantly higher than expected. Month on month was 0.5 versus 0.1 expected. So again, this shows us that inflation is still smoldering. So again, we got a relatively negative reaction out of the market and a rotation back into defensive sectors. So you can see even X food and energy, it's above the Fed's 2% target. So again, pushes out the time frame for any kind of rate cuts. Again, no reason to cut. They need to get their inflation back down to their 2% target, and this is a move in the wrong direction. We also got Michigan sentiment. So it was 1-year inflation is now at 3%. Again, Fed's not going to like that, right? They want to see 2%. 5 years still high, 2.9. Consumer expectations a little more positive. Sentiment pretty much in line, and current conditions pretty much in line. Just a quick reminder, Monday all the markets are closed for President's Day, Washington's birthday, what they now call President's Day. Also, the big event for this week in terms of earnings is NVIDIA on Wednesday. I'll talk about that just briefly, as I think, NVIDIA has a tendency to beat expectations and increase their guidance. If they do not meet those expectations that the market has for beating their earnings and upping guidance, I think we could see a very violent negative reaction, not just on NVIDIA, but also the whole AI cohort, SMCI, etc., all the ones that are on the tails of NVIDIA. So again, the expectations are very high. If they don't beat those expectations, again, we could get a pretty negative reaction. Also, we may see a run up into those earnings with that expectation of them beating and raising, and again, a pretty negative reaction if they don't meet those overly exuberant expectations on Wednesday. So if we look at some of the other economic data from last week, auctions were okay, it looks like. Again, we've got Fed speakers talking, so some volatility. We'll probably hear more of them talking about this hot CPI and PPI data and what impact that would have on, future rate cuts coming up. Crude oil stocks much higher than expected, but again, we saw the prices go up. Mortgage rates went up, so we saw housing start to slow down. Again, oil inventories up significantly more than expected. More Fed speakers. Talked about retail sales and jobless claims. Utilization's pretty stable. Manufacturing production negative. So again, economy overall slowing somewhat. Natural gas storage was down less than expected, but again, we still saw the natural gas price continue to collapse. Talked about PPI data and Michigan sentiment. Oil rig count down a little bit. So again, supply decreasing slightly. Overall rig count down a little bit. So again, they're decreasing supply, trying to hold the prices up. Let's look at the economic data for next week. So Monday, again, markets closed for what they call Washington's birthday or President's Day. Got some bond auctions, mortgage data, more Fed officials talking. We've got FOMC meeting minutes, so people will be looking at those minutes 2 p.m. on Wednesday to see if there's any further indication of when to expect cuts. Get jobless claims on Thursday. Again, the other big event on Wednesdays could be NVIDIA earnings. Get home sales, natural gas storage, and then oil rig counts on Friday. So again, we still got quite a bit of earnings. So we can go to the earnings calendar. You can see all the details. Again, the big event's going to be NVIDIA earnings, but you can see we still got quite a few other companies reporting earnings. So possibly some sentiment plays in other segments. Based on their earnings. Again, anybody that's missing on earnings gets severely punished, but guidance is also very important. They can beat on earnings, but if their forward guidance gets cut, or even if it's in line, you could see a decline. So we've got some banks, etc., biotechs. So you can see the whole list of earnings. Again, the big event's going to be NVIDIA on Wednesday. You've got Walmart, Home Depot, so some retail, public storage, realty income, some REITs. So again, I'd highly suggest you familiarize yourself with any sectors, companies that you might be interested in, and listen to their earnings. You can hear how we trade around earnings in the link to our video on how to make money trading when earnings matter, and earnings definitely matter as well as guidance. Also, reminder, the next Fed meeting is until March 19th and 20th. The percentage of a cut, I think the markets finally realized they're not going to get any cut in March. Now they're talking about May or June. Again, I think it's still premature, and I think we're going to see more correction in the time frame for cuts based on this continuing smoldering inflation. Okay, so let me jump over to the market screen in Webull. Let me grab a quick drink, check the chat. Happy birthday to Ellen Krentz. Thank you for joining us, and happy birthday, if that's correct. Okay, just a quick reminder, if you're not already using Webull, you can get up to 75 free fractional shares of stock by opening an account with 25K or more. If you open your account with less than 25K, you can get 20 free fractional shares of stock. You'll see we use Webull for our market analysis, our due diligence, the majority of our trading. And again, if you use our affiliate link in the description box below, you can get your up to 75 free fractional shares of stock, each worth $3,000 to $3,000, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the online browser version of Webull. This is the market screen of the online browser version of Webull. So we can see in the histogram from Friday, we had significantly more decliners than advancers, but the percentage of decline was very small. Percentage of advance was very small. So pretty tight distribution, as we've typically seen for quite some time. We get this net inflow into the NYSE, net outflow out of the NASDAQ, although we had early inflow into the NASDAQ. we see that trail off towards the end of the day. Probably again a lot of profit taking. Again, probably exacerbated a little bit from the long weekend as well as the options expiration. Again, you can see a near-term earnings calendar here on the market screen in Webull by selecting the calendar tab. And then again, you can see who's coming up in the very near term. If they're reporting before market open, after market close, you can see what the estimated EPS is, etc. So again, you can keep track of the near-term earnings here in the market screen in Webull as well. Again, we can see that new heat map they've added. So we see, and you can do by industry. So you can break that down, a heat map by industry. Here's industrials. I want to look at the best performing industries for the week. So we see solar, oil, some biotech, some financials, some construction. That's interesting. Bulk and material. So the construction is heavy construction. See some utilities. Again, some more financials. Some pharmaceuticals, more utilities. Semiconductors, pretty mixed. Paper products, again, more defensive sectors, healthcare, utilities. So again, a little more defensive bent this week. Look at the most popular ETFs. So short the Russell, short small caps, short the NASDAQ, short the Dow. So again, very negative right now as of Friday. Short the NASDAQ, short the VIX. So even though we're getting, a downward trend in the indices, volatility, we saw a quick spike that we'll see in the futures on the CPI data, but it didn't hold for very long. So you see it wick, we'll see it wick down pretty quickly, and volatility, I think it's down below 14 again. So again, short the Russell, short small caps. So industry-wide, pretty negative except for energy, a little healthcare, some defensive. So again, basic materials defensive. So again, a defensive bent. It must be a physical platinum or palladium. Okay. So we'll look at the futures real quick in PinBiz. Let me grab a drink. Sorry, I'm a bit congested and don't want to cough in anyone's ear today. Okay, again, if we look at the futures, we see everything pretty much riding its tops, new all-time high. We see the trends, all very positive. I, again, expect in general they're going to, retest that. Those highs get rejected, so a lot of chop. Again, if you're a short-term trader, plenty of opportunities if you can spot those rejections and then the bounces back to retest. But again, the trend's definitely upward. A lot of exuberance in the market. See the Russell, again, broke its previous high, probably eventually test that high. Again, with some exuberance. Nikkei's been very strong. I'm not sure if it's even found a top yet. It's been very strong. Europe bounced back, headed back up. DAX finally broke out of its lateral movement. It bounced up a bit, so it's making new near-term highs. There we see that big spike in the VIX on the CPI data, but again, it gave those gains up very quickly and then downtrending again. So it is so slowly elevating, a little bit. So if we continue to get smoldering inflation data, we'll see these pops in the VIX. Again, oil's trading now above 75, between 75 and 80. So we'll see continue testing 80 again. Again, pretty much a collapse in natural gas. We talked about where the bottom, the near-term bottom in natural gas, about 1.51, 1.52. So we're waiting to see a test of that recent low. But again, Easy Mike called it very well. And congratulations to Easy Mike on calling, that collapse in natural gas. So again, if we find a bottom, we're watching Boyle, as you'll see tomorrow, to get another position in swinging and scalping natural gas with Boyle. Again, if you're momentum trading, although again it's pretty near that bottom, so there may not be significant downside. The down risk reward's definitely probably now towards the upside. Again, we see gold bounced off 2,000. Now it's trading between 2,020, 2025, 2050. So holding 2,000 pretty steady. Silver regained its footing above 23, so it's trending up. Again, I think there's better risk reward, more upside in silver. See platinum, palladium bounced. Also copper. I guess Easy Mike wanted to look at PAL, which is the ETF on palladium. This bounce in copper also, if silver is generally considered an industrial metal like copper, so this strong bounce in copper should also be a tailwind for silver. See we saw, corn really dropping off. See a real steep drop off in wheat, so it's not really quite down to its recent lows, which is about 540 or so. So we'll be watching to see a retest of that low in wheat. Again, you can look at the corn. We'll look at ETFs in a few minutes, and there's a corn ETF, although the risk reward for a swing is not something I'd look at, but we've traded wheat, WEAT, numerous times profitably. But again, we want to see a retest of those recent lows. Cocoa finally rolled over, so maybe Hershey will recover from that. Sugar rolled over too. So then again, we saw bond yields perk up. So we saw a drop off in bond prices more steeply in the near term than in the longer term. So the longer term seemed to have found some support. 30-year definitely got some support. 10-year looks like it's establishing support. And we saw a DXY, a quick retest to 105, and then declining back down to 104. So trading range between 104 and 105 now. And most of the foreign currencies, pretty much trading in line with the DXY going up. Foreign currencies will generally down. Okay, so now we'll look at our ETFs Google Sheet. If anyone has particular commodities, indices, topics, categories you'd like to look at, you can throw those up in the chat. As I mentioned, I believe Easy Mike wanted to look at PAL, palladium. Just a quick reminder, if you'd like to get 24/7 access to our ETFs Google Sheet, as well as our dividend payers Google Sheet and our puts ROIC, which we use for options trading, you can get 24/7 access to all of our Google Sheets, in addition to additional benefits by joining our Patreon at the All Access and we're VIP level. Let me grab a quick drink and we'll talk about the additions to our ETFs Google Sheet, and then we can look at anything else in the chat that you want to look at. See you guys talking about TEL in the chat. I'm not familiar with that offhand, so obviously I didn't trade that. Let's see what TEL is, as that seems to have some. Okay, so it's a individual stock. Oil, okay, oil and gas stock. No, I didn't trade TELL. So congratulations to anyone who profited on that nice bounce. So easy Mike, etc. So no, that's not one I traded. Again, I'm not terribly interested in somebody that's losing a lot of money. But again, short-term trading. If you made profit in TEL, congratulations on that. In addition, I wanted to point out and take a quick look at something Sydney Osborne mentioned in one of the chats, which is another crypto industry ETF, FDIG. So I did the research on FDIG, Fidelity Crypto Industry and Digital Payments ETF. We put it in the research tab in our Google Sheet, so we'll take a quick look at that. Just a quick reminder, someone asked in the Discord how you find a symbol or a string in our Google Sheet. So if you just hit Control F, just like you do a find in many of the Windows products, and you can type or copy paste any string into the find in sheet box that pops up, and then you can see it automatically shows you how many matches are there. Also, a nice feature of this find is that if you go between sheets, it will show you, how many times that string appears in whatever sheet you're on. So we can go back to that, and then you can scroll through the number of occurrences with the up and down arrows. So again, just a reminder of how you can find symbols or strings very easily in these Google Sheets. So here's that FDIG, Fidelity Crypto Industry. So you can see it's got a pretty decent, 52-week risk reward, 2.6, short-term 2.2, bottom to top, 3.3. If we want to look at what's in that particular ETF, we can click on its profile via the link in the ETF database column. So this says analyst report pending, so it's pretty new, February of 2024 maybe. Look at the holdings, see if it's got the holdings. So Mara Coin, Clean Spark, Riot. So again, another HUT, BTBT. So again, another, miners ETF. So you can see, compare the holdings of it to some of the other crypto industries. So we'll look at some of the other cryptocurrency ETFs that we've got in our main sheet. So if we go to cryptocurrency, we've got BITQ, Industry Innovators. We've also got Block. So you can compare the risk reward. So this BITQ appears to have, significantly better risk reward profile than that FIDG right now. Even block from a short-term time frame looks a little better, and even from a bottom to top. So again, another ETF you can use to trade cryptocurrency, Bitcoin miners, etc. Again, if you like the composition of that particular ETF better, it's another option that you can use. But again, if we wanted to trade cryptocurrency generally, we'd probably use BITQ or Block. We've also got several in both. Got the old Bitcoin ETFs, BITO. So again, it's got probably a more attractive short-term risk reward profile, and you can short Bitcoin with BITI, and then we've also got BITX. So we've talked about that, even better risk reward profile. And then we've got the new Bitcoin ETFs that we're kind of watching in our research tab. So I hope that all helps. So thank you again, Sydney Osborne, for pointing out that FDIG to us. So again, another option people can use if they wish. Talked about, all the different technology, longs and shorts, so ARK and SARK and LabU and LabD, etc. Brazil's continues to be strong. So EWZ is the long on Brazil. Again, I wouldn't. Looks like it's continues to be pretty strong. Been watching the cannabis ETFs, MJ, MSOS, MSOX, still above their lows. We did have a China recovery, so yen did bounce up some. So I think they're still in their Lunar New Year celebrations. Talked about some coals. We talked about Fang U and Fang D. Easy Mike wanted to look at PAL, which is the palladium. So here's the PAL palladium ETF. So it's bounced back up. 52-week low was 78. Again, it had a bounce and a slight retracement. Again, I've kind of given up on trying to trade that. It's pretty illiquid, choppy, low float. So if you want to take a shot at catching those bounces in palladium, you can do it with PAL, platinum PPLT. We also looked at previously I think it was SPPP. I think we have that in our platinum and palladium physical, platinum and palladium. So you can also use SPPP. It's a combination of platinum and palladium. And again, you can see the risk reward profile for that in the research tab. WGMI, Easy Mike, I think we have that in here. WGMI. So again, another, here's how you can do a find the ticker. So yeah, we have WGMI, so you can see the risk reward profile for that. It's under Bitcoin miners. So again, you can see the risk reward profile. And if you like trading the Valkyrie Bitcoin miners, so let me see if there's anything else in the chat anybody wants to look at. Again, oil, drip and gush, gush long, oil short, or UCO long, SCO short. Talked about boil and cold for natural gas. Talked about SOX S and SOX L. For silver, if you want to trade the bounce in silver, we like AGQ. If you want to hold it and collect dividends, SOBO. If you want to play the miners, SILJ. Solar, raise and tan. Again, pretty volatile. And then broad technology, TECL long, TECS short. We've got the individual stock ETFs, both here in the main sheet as well as our research tab. If you want to trade bonds, long TMF or TLT, short TBT. And then we've got different time frames as well. Uranium, I couldn't find a short on uranium, an ETF to short uranium. If anybody knows of an ETF to short uranium, so we couldn't really play that rollover in uranium, but we've got the longs. Talked about utilities, again, kind of in the middle of its range right now. And again, we're watching wheat. This is the ETF on wheat, WAT, still above its 52-week low, but we'll keep an eye on that. Okay, let's talk about our theme for this week, some strategies on how to make money trading while inflation's still smoldering. So we've done a lot of discussion in the past about inflation when inflation was heating up. So as inflation heated up, we talked about strategies for, how to trade higher inflation and which sectors, to protect your portfolio as inflation, was increasing. So now, we did see a decrease. Inflation had been coming down. So we saw a rotation out of those more defensive sectors into kind of your growth, more of your growth sectors. And now when we get the smoldering a little bit hotter than expected inflation, we see the rotation back into the defensive sectors like we saw consumer defensives, utilities, healthcare, but again, the utilities are also interest rate sensitive, so we saw bond yields pop back up. So again, I think we're going to continue to see those sector rotations in more defensive sectors as the inflation data comes in a little bit higher than expected. Again, we've still got PCE data coming out, and this hotter than expected PPI data will feed into the PCE data. And again, the Fed specifically watches PCE. It's probably their favorite indicator for inflation. And my personal opinion is I would expect that to come in a little bit hotter than expected unless they adjust their expected numbers. Again, it'll probably come in hotter than expected. The market will probably react negatively to that. And again, I think we'll see a more flight to safety into your more defensive sectors. So you can hear our previous discussions on how to inflation-proof your portfolio. So as we get the hotter than expected inflation, we would expect rotations into those more defensive sectors. When that reaction dissipates and it cools off a little bit, then we'll see a rotation back out of those defensive sectors back into your Magnificent Seven, etc. Again, in my opinion, they're also viewing the Magnificent Seven as a place to go, flight to safety. And in reality, a lot of your FANG stocks, your Amazon, Microsoft, Google, etc., are not sensitive to inflation. Although probably Amazon a little more sensitive since those are consumer products, but their advertising, etc., probably not as sensitive to inflation. So again, plenty of material that you can hear about how to trade, when inflation is heating up, when inflation is cooling down, which sectors to rotate into. And again, I think we'll see this continued rotation in and out of those inflation sensitive sectors going forward. So I hope that all helps. Sydney Osborne asked if Blue Mountain is good coffee. Blue Mountain is great coffee. In my humble opinion, Jamaica Blue Mountain coffee is the best coffee there is. Uh, and then next is probably Kenyan Double A. So, yeah, I'm a coffee fan. Yeah, Jamaica Blue Mountain is the best coffee there is with raw cane sugar. So totally off topic, but I couldn't resist that one. So we've also got a number of videos, and we've been talking about how to make money trading in February, so you can listen to those. We're now in the second half of February. Again, February tends to be a down month historically, and we're seeing a little bit of a rollover in the indices. So that historical trend, again, if we get bad NVIDIA earnings, we may see a pretty dramatic downturn towards the end of February. Talked about how to make money trading in the winter. So again, you can hear all of those videos via the links in the notes. So thank you, Ellen. So if you want to talk coffee, another nice coffee is they have Peaberry coffee out of Costa Rica, which is a little different, a little bit stronger, kind of interesting. So tomorrow we'll also talk about our dividend payer stocks. So we'll review opportunities to generate income using dividend payer stocks, also our options strategies, and we'll show our puts ROIC Google Sheet, how we identify potential opportunities for selling and buying back puts. So we hope that you like this content. We'd love your feedback in the comments below. If you have any questions, comments, suggestions for improving our weekly trading game plans or any of our videos or any of our tools to help add more value for all of our BeachBum traders, we'd love to hear your comments in the comments below this video. Also, again, we'd encourage you to join and participate in our free Discord. So again, you can always contact us in our Discord. We're BeachBum Trading. No special characters, no additional pound, etc. So it looks like we've got a couple imposters to deal with again. So we'll take care of that right after this. We've also got a Facebook group you can join and participate in, and you can always contact us via the links to our social media sites on the links section on our homepage, which is beachbumtrading.com, bum without the U. So again, plenty of ways you can contact us, make your suggestions, ask us further questions. If we happen to miss your question during the chat, please put it in the comments to this video in our Discord, etc. I can't always go back in the chat and see all the questions, and I apologize if I missed it previously. So again, we'd love to hear from you, how we can help you make money trading, succeed in your trading career. Please smash the like button on this video. Help us try to eventually get the YouTube algorithm to share our content with more traders around the world. And we'd greatly appreciate it if you directly share our content with your fellow traders. Let's help continue to build our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So thank you all again for joining us for part one of our weekly trading game plan for February 19th through February 23rd. We hope you all come back tomorrow, same bat time, same bat channel. 10 a.m. Eastern Time on Sundays for part 2 of our weekly trading game plan for this week. And we'll be taking all this data, all the market analysis, strategies, etc., and selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Again, we'll also talk about dividend payers and how you can build yourself a schedule of dividend payers to generate a income stream while we wait for, our swing trading stocks to set up and inflation to stop smoldering. So again, we hope we'll see you all again tomorrow. Thank you all for watching and have a great day.